Aloha everyone. This is going to be the last video lesson of the week as I want to finally take some time off. And with the market being a half day Friday and closed on Thursday, it's a good chance for me to have basically an almost 4-day weekend. I never take time off. I'm here every day and I work almost every day. And I need a little bit of time off as I just need some time off. I'm burned out. But I'm burned out in a good way because everything's going well for us portfolio wise. Intraday today, I only had one sell stop hit, and it was a 50% sell stop on rate. Of course, by the end of the day, it's completely fine, and I feel foolish for having it hit, but it is what it is. So rate did hit 50% of a sell stop. And now getting back to the overall market because of that 50% sell stop, intraday we started to sell off a little bit, but we managed to rally throughout the rest of the session. And on the NASDAQ, you can see we closed slightly higher, and volume was up nicely. And that's great. With us closing higher than where we opened following an intraday morning dip, it's great. Higher volume, especially in a holiday trading week. Extremely impressive by the NASDAQ. So that was good to see. New York Stock Exchange volume came slightly higher, but it was up 0.27%, so that's good to see. The S&P 500 was up 0.12% on higher volume, so once again, it's hard to really be too upset with the action in the overall market. Only the NASDAQ 100 finished lower, and once again, the heavier volume came with a higher close than where we opened and an intraday reversal off the lows. Excellent day, and then finishing and rounding it off, the Russell 2000, that led the way today. So some more relative strength out of the Russell 2000. It's something that we've seen continuously since its move on 11/18. Every single day it's been leading this market higher. So we've got the right index leading the way short term after it was lagging there following the October rally off the lows. But everything looks good, like I said. Besides the 50% rate sell stop that hit intraday, which I would love to put back on with the close with if it actually trades to a new high, but I'm fully invested in margin accounts maxed out too, so things are actually going very well for us. But I actually got a couple of end of day sell signals. So JBSS is closing below the 20-day moving average on above average volume before producing any gains. So it hasn't hit any sell stops yet on my end, but it's a large position. So half of the sell stop is going to be at 59.32 for me. So if it hits 59.31, I'll be out of half of JBSS. And technically I prefer the final sell stop to be below 58.67 because that's our first signal date. That's our add signal. And so with the two back-to-back signals, it shouldn't trade below 58.66. So what I'm thinking about doing here, kind of weird, I know, but I still like the pattern. So JBSS have 50% of my sell stop with a move below 59.32. And then let's say if I have 100 shares, so I'll have 50 shares remaining. I'd like to put 25 of those shares below 58.67 and then the other 25 of those shares below 57.31. So half my sell stop will be with the move below 59.32, and then I'll be splitting up the remaining shares between 58.67 and 57.31. It's a big position, so I don't mind doing that whatsoever. And then also VA, I've been completely knocked out of it with this move here. It knocked me out of my entire VA position because it went below. When it wasn't moving higher immediately, that became the automatic final sell stop. But now it's gapping down and closing lower, but big intraday reversal. This obviously would have hit all my sell stops, and I wouldn't even be in this thing anymore, as this would have been the low of day, my final sell stop. But technically on an end-of-day basis, with it closing at 35.65, 35.65 is still basically above what I would have considered at the time to be the final sell stop level of 34.23 back there. So technically VA is still a long position, a close below the 50-day moving average. It'll be a full sell, but it's definitely a 50% sell. And if you're even in it still, that's pretty amazing. But to me, it's basically done, goner. I don't know at all how I would still be long this stock. But technically, it's above the 50-day moving average. It's still trending higher. I know 35.65 is below the low of day, 35.77. But technically, 35.05, 34.50 was what my first sell stop was on the position. And really, all these moves have been below average volume. So none of the moves below the 20-day moving average have been above average volume. So that's why on an end-of-day basis, if that's how you're following these signals, it's still good. It's a 50% sell signal. Now, we do have two new long positions tonight. Both are higher quality. Shure is a barely canceled quality stock because it has a 70 EPS rating. If it would have a 69 EPS rating, this stock isn't going to be a new long position period, because it just would have been in the new highs and price volume BOP scan, and I would not have been happy enough with that volume surge and BOP surge to go long. But because it's canceling quality, has a previous uptrend on big volume where BOP went to max green and stayed max green for a while. Since it pulled back orderly, even though volume's been heavy lately, I'm willing to go ahead and take it as a position since I barely have any capital left. So on an end of day basis, even though it was in a new high scan in the price volume BOP scan, it's a canceling quality stock. It's a low price stock. I probably would only give it 2.5% long position for being canceling, and just add another 0.5% for being price volume BOP, because you don't want to get big with a stock like this. It's only a $10 stock. It's barely canceling. It's just a good looking name. But if it wasn't canceling, like I said, I would not be going long. And then the final long position is PEGA. As you can see, it's producing a pocket pivot point signal in this tight consolidation pattern. I guess the Zoom 5 shows it the best. Nope, Zoom 4 does. So pocket pivot point signal. BOP doesn't surge that much, but volume is well above average. It's a nice little move overall in this tight basing pattern, and my clear final support level, the line in the sand, is very clear. My risk is very low here, buying it here instead of waiting for a breakout above these recent highs. The pocket pivot point signals are good to go to. It's got a 97 EPS rating, huge earnings and sales growth, more is to be expected next year. It's hard to pass on this name. This, though, was only in the canceling scan, not even close to being perfect speculator quality. The volume surge wasn't enough to put it anywhere, and there's no, if it almost had a green BOP for 20 days, but it missed it because of this one day here, so I guess it's close enough for a confirmation. But 2.5% for PEGA, it's the higher quality one, canceling quality stock, and 2.5% for SHOR. Technically, you could get up to 3% with the price volume BOP confirmation, but like I said, this low price stock, and this, in this tape with a lot better quality patterns that are still forming and haven't broken out yet, I would keep SHOR 2.5 and PEGA 2.5. If PEGA would have been confirmed, PEGA could have gotten all the way up to 5%, but it was only in one scan. So 2.5 PEGA, 2.5 SHOR, 50% sell JBSS, 50% sell VA. That is it. KBIO, we couldn't find shares to borrow at IB, but intraday yesterday, we nailed that top right around the 45 area, 44 area. Boom, 53% gain today. IB didn't have shares, and the borrow rate was 2%, but what? So now you get a 51% gain? Not too bad. It's not like I'd be holding this one overnight anyway. It's too scary. But not only that, EFUT was one intraday on the long side. Some subscribers were asking, how come you don't hold it into the close? How come you sell it with the breakdown, even though it's still under an overall uptrend? Well, it's because with these names, when you're up that much in one day compared to the overall pattern, if you're not going out at the high of the day, you got to sell your stock. I'm sorry, you don't hold these piece of shit stocks overnight. And EFUT gapping down from 1157 to 1004 is a perfect reason why. But if you guys are platinum members and watching this video, I recommend getting in our chat room. We've had some amazing calls intraday with some very huge winners. We're on top of it. VLTC was the other one today. I'm shocked it kept on going, but tell you what, we were on it once again intraday. So get in the chat room. If you're not getting in the chat room, make sure you watch that pre-market watch list, because if you're day trading, you've got to be following the names that we're following, because we're making sure that we're on the names that all the degenerate gambler day traders are on. All right, everyone, have a wonderful Thanksgiving holiday. I will see you on Monday. Unless something insane happens in the market, then I guess I will make another video lesson. But I really doubt anything's going to happen Wednesday, Friday.